Good afternoon, everybody, and welcome to this week's edition of the Elite Traders Club Weekly Analysis Session. It's Friday, the 8th of April. Let's get underway. It's just gone 4:30, done the scans, etc. Interesting week this particular week. Markets all over the place, but nevertheless found some new setups which look fairly good. The disclaimer first and foremost, the content of today's presentation or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, your financial situation or particular needs. So before making an investing decision based on the general advice presented in any of the ETC presentations, please consider whether the advice is appropriate in light of your financial circumstances. All right. Today, this afternoon, portfolio management will go through, have a look at what the indices are telling us, what the current levels of market risk are, some specific setups as well. All right, for the time being, the S&P ASX 200 is still in high market risk mode at this particular point in time. So what does that really mean? Well, the easiest way to think about this is that depending on if you're dealing with direct shares, and most people who are sort of medium to long-term investors tend to be dealing with direct equities, it means that you are allowed to expose up to 40% of your capital to the market. So investing 40%. So if you had $100,000 portfolio that you were looking to invest into the markets, you would have 40% of that actually in the market at this particular point in time. That's the easiest way to think about it. The other way to think about it is using the value at risk model, and the way that we do that is we look at what our maximum value at risk is under a low market risk condition, which is 15% for most people. And then because we're in high market risk mode, we need to apply this market risk multiplier, 40%. So 40% of our maximum allowable drawdown, that is 40% of our 15, would mean that you're allowed to have 6% value at risk exposed to the market. Now that's you can in fact get up to those levels with shares, but sort of once you get out past about 10%, it's very difficult to get any more exposure, any more value at risk, because you've run out of money. And so therefore using the percentage-based model is generally easiest for most people. All right, now thank you for watching. It's not the end of the webinar. Just a reminder that today, as part of the macroeconomics analysis session that I did with Jeff, we looked at earnings season in the US. So we'll go through and have a look at the markets now. But if you've got some time over the course of the weekend, that's well worthwhile having a bit of a look at, particularly those of you who are predominantly invested in the US market. All right, let's go through and have a look at the market risk first and foremost. So I'll just go through to our indices section there before having a look at our market. And you can see here, again, this longer term moving average is really just acting as that sort of dynamic resistance zone at the moment. We've come down over the course of this last week from sort of Monday, Tuesday, Wednesday, Thursday, Friday, just almost about break even on the day. We're still in high market risk territory at the moment. It'll be interesting to see what happens next week, whether we trickle down into very high market risk or whether we can move strongly enough to ease the decline of this stochastic indicator. Anyway, that's where it is for the time being. And again, it's just a matter of being focused on your capital management and just sticking with your trading plan. All right, so let's go through and have a look at some of the pendings for this particular week. Now, I'll go up to the top of the list here for the pendings, and we'll go through one at a time because they're a couple of cancellations from the last few weeks. You'll notice that we've got JB Hi-Fi in here. It didn't trigger over the last few weeks. And now, by virtue of the fact that we have a confirmed short-term downtrend, we have confirmed the formation of a lower peak. Okay, and wherever this new trough is going to form, that new trough, is that trough going to be above the second from last medium-term peak? This is now the last medium-term peak. That's the second from last. Is this medium-term trough above that level? No, it's not. So it's going to invalidate the setup. So that one's going to be cancelled, and that will be coming out of the watch list. That's JB Hi-Fi. ABC, Adelaide, Brighton hasn't quite this week. Hasn't quite got up to our on-stop level there of 518. Very close. And not a bad candle considering what's happened on the market for the rest of the week. So again, still maintaining its relative strength. So we'll just have to wait one more week to see whether that one triggers. ALU from last week triggered. Certainly would have been nicer to see the candle closing up a little bit higher, but nevertheless it has closed higher than the previous candle, which is at least a positive sign. So bull's still in control there. Certainly a little bit of supply overhead, but that one triggering and going into the watch list as we speak. ARF, this is one that's been on the watch list for a couple of weeks. It hasn't triggered. In actual fact, this last week it developed a short-term downtrend. So a little bit like the earlier stock there, JB Hi-Fi, in that we've now formed a lower medium-term peak. And wherever this new trough ends up developing, it's certainly going to be lower than where it currently is. Or at least it may well be there, but that last trough, even if it does form there, is that at or above the second from last medium-term peak, which is this one? And the answer to that is obviously not, and so therefore the price action filter has also been invalidated, and that voids us from taking that particular trade. So that'll come out of the watch list as well. New setups for this week are DCN. This is a little gold stock which broke out of this sideways pattern a number of months ago and has moved really, really strongly. It's come back, it's had a little bit of a retracement, and it's setting up again. So all we need to do is just zoom out and see where this has been. And that's the history of the stock. So you can see it doesn't have a long history, but certainly of late showing very good relative strength and good price action as well. That last trough coming in way above second from last medium-term peak. So to structure this trade, we just need to place an on-stop order 0.5% above that last medium-term peak. So our on-stop order comes in at $1.91, and our protective stop needs to be at least 2 ATRs below that last, medium-term peak, below our entry level, and it must also be at least 0.5% below the last medium-term trough. So we have a stop loss coming in there at $1.51. That's DCN Gold. Next stock for this particular week is GJT. It's a little bit difficult to say, GJT. What I'll do is I'll just go up there and zoom out. And you'll see that, look, this does have a long history way back into the mid-2000s, really. In terms of any overhead resistance, etc., we've really got to go way back to 2009, which is a long, long time ago. So I'm actually going to be ignoring that. That's getting on to nearly 7 years ago now. So at this particular point in time, we've got a pretty clearly defined setup there. Even if we zoom right out, you'll actually see that the next sort of overhead level, we've come up to a previous peak over here, which we've now testing, but even above that, we're really getting up to, close to the $4 range, which is a long way away from this particular setup. So in terms of the price action, last trough just forming here by virtue of this last candle producing a short-term uptrend. Our last trough well clear of the second from last medium-term peak, so price action really, really good. Very strong price action. In fact, big gap up there, coming back to retrace and looking very strong as well. So we just need to wait for this to clear that last medium-term peak. To do so, we're going to place an on-stop order at $2.52, and we're going to put in a protective stop at least 0.5% below this last medium-term trough, and at least 2 ATRs below our entry line as well. So our 2 ATRs on this particular week is telling us that our 2 ATRs is actually 17.5 cents. So we're going to place a on-stop order at least 17.5 cents away from $2.52. But we also must be at least 0.5% below that last medium-term trough. That's GJT. Another one setting up nicely at the moment is LEP. Let's just zoom out and see where we are. We're at all-time highs. which is a very positive sign. And again, you'll see that really being replicated, if you like, in terms of the relative strength there. The longer term relative strength has been very, very strong indeed. And just recently, getting past this sort of supply zone there at around about $4. So breaking out, coming back, retesting, nice positive retest, last trough at or above the second from last medium term peak, which is a positive sign from the price action perspective. We've just got to wait now to break the last medium term peak. So to do that, we're going to place an on-stop order at $4.27. And we are going to put in a protective stop at $3.92. $3.92, that says $3.94 there. I'll just change that while we're speaking. $3.92, wind it down a little bit. There we go, and I will save that analysis as well. So overwriting the one that I did before, and that's been saved. So that's AL Property Group, on stop at $4.27, protective stop at $3.92. Another one, Saracen. Saracen Minerals Holdings. Let's zoom out and see where we are in the scheme of things. Another stock at all-time highs. Interesting, isn't it, that how our market has been behaving over the last 6 to 9 months, and yet some stocks can continue to move higher and higher. Again, price action. Last trough forming well above the second from last medium term peak. So very, very strong price action. It just needs to move past our on-stop order. And that on-stop order there is 0.5% above the high of that medium term peak there. The high there, $1.09. 0.5% above that level is $1.09.5. So we just place an on-stop order. And then making sure that our protective stop is at least 2 ATRs below our entry level and at least 0.5% below that last medium term trough. So that has our stop loss coming in at 87 cents. That's Saracen Minerals. Right, we might go through and have a look at the watch list for the time being. Those stocks that are currently open or those that have triggered during the course of this last week. EDE. Now, why hasn't that gone through to my watch list? It should have. I'll pop it in there now. EDE, Eden Energy. And I'll just bring that one up there. Again, you'll see that on here we had a long-term peak quite a long time ago in 2011. Did we have a setup that would allow us to get 2 to 1 into that level? Yes, we did. And this particular week, you'll see that stock actually triggered and had a very big week indeed. So moving from around about 11 cents up to 17 cents. So really big move already. That was EDE. So I'll just add that to the ASX weekly opens list. Weekly ASX opens. There we go. So I'll pop that into there. Another one that triggered during the course of the week was ALU, which we had a quick look at before. Altium Limited, that's triggered, so that was another one that's in the open list this particular week. In terms of trailed stops, PLS. If I bring that one up there and put on our trailing stop, you'll see nice big candle this last week, and really doing a lot of the heavy lifting and dragging that trailing 3 ATR up as well. So that's now certainly at the very least a break-even trade, and being almost up 1 to 1 in that trade already. So that's a good sign. BOC. Again, nice candle this particular week, and again just dragging that trailing 3 ATR up further as well, so taking some risk off the table on that one. VOC performing really well. GMM, General Mining. Great big candle, not unlike PLS as well, and now dragging that trailing 3 ATR well beyond the initial protective stop. So really essentially taking all the risk out of that trade now. I did have a fairly wide stop in percentage terms initially, but this is a very volatile stock, and during the course of the week, obviously putting on a lot, going from pretty much close from 40 cents up to highs there of around about 59 cents, 60 cents. So that's a really significant move during the course of the week. So not too sure whether anyone managed to get onto that, but hopefully you've got some stocks that are trickling along well for you. There was one stop out this particular week, CKF, Collins Foods. And this week, closing below its trailing 3 ATR. So the initial setup of this particular stock, the 3 ATR was pretty much at the same level as the initial 2 ATR base stop. And subsequently, upon triggering, 3 ATR line coming up, so that's the one that we defer to, managed to keep its head above water for the last month, but certainly during the course of this last week, being sold off very heavily, wasn't able to find enough demand down at this level to keep its neck above water. So that's one that's coming out of the watch list, according to our trade management rules. So that was the only stop out this week. Interesting to see those new trades, those new setups there, and a couple of the trailed stops performing. A couple of those stocks with the trailed stops performing very, very well at the same time. All right, well, that's about it for this particular week. Don't forget, Monday afternoon we'll be doing the US ETC session. So in the meantime, again, just keep things simple. Keep your eyes on the goal. And the goal longer term is to protect your capital, keep your investing as simple as possible, be patient, cut your losses short, and let those profits run. All right, have a good weekend, and we'll catch up with you on Monday. Bye for now.